Oil prices plunged to an 8-month low as the U.S. economy slows and gasoline demand wanes. Inflation is raging. And the Federal Reserve has aggressively raised interest rates this year to fight inflation. As a result, the United States economy is teetering on the brink of recession. House prices are crashing. Consumer spending is weakening. And overall macroeconomic conditions are weakening. So, understandably, people are feeling poorer and driving less. Some experts predict that the United States has already experienced peak oil demand. Others are not so sure. What does this mean for consumers? What does this mean for energy markets? What does this mean for oil companies? What does it mean for the U.S. economy? And what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Well, what everyone predicted finally happened. At long last, high gasoline prices are causing consumers to cut back on driving. As the old saying goes, the cure for high gasoline prices is high gasoline prices. Oil prices plunged about 5% to an 8-month low on Friday. The US dollar rose to its highest level in over 20 years. The Federal Reserve has aggressively raised interest rates so far this year. All of this is softening demand for oil. Brent futures were trading as down by $4.19, which is 4.7% lower, at $86.27 a barrel. U.S. West Texas Intermediate crude oil traded down $4.63, or 5.69%, to $78.86. U.S. crude is projected to close at its lowest level since January. Oil prices have been declining for each of the past 4 weeks. December 2021 was that last time that happened. U.S. gasoline and diesel futures were also down more than 5%. Federal Reserve Chairman Jerome Powell raised interest rates by 75 basis points this week as expected. Almost all of the central banks in the world are also raising interest rates as their economies slow down and enter recession. It seems central banks are poised to remain aggressive with rate hikes, said Edward Moya, senior market analyst at data and analytics firm OANDA. That will weaken both economic activity and the short-term crude demand outlook, continued Moya. The US dollar is the world reserve currency, and so oil is more expensive for buyers using other currencies. We had the dollar exploding higher and pushing down dollar-denominated commodities like oil and growing fears over the looming global recession that is coming as the central banks raise interest rates, said John Kilduff, partner at Again Capital LLC in New York. The Eurozone downturn in business activity deepened in September, continued Kilduff. Consumers in the U.S. are cutting back on spending as layoffs spread throughout the country. Energy prices are rising in Europe because of war in Ukraine. European governments are urging energy conservation after Russia shut down gas pipelines. Wall Street indexes continue to sell off day after day into bear territory. Corporate earnings continue to slide. This month, gasoline consumption is 8.56 million barrels per day on average. Gasoline prices spiked in June at a national average of more than $5 per gallon. If U.S. refiners have stopped investing in new refinery capacity, they see demand stagnation and refuse to make further investments. OPEC+, the powerful oil cartel, has just surprised the world with an unexpected cut in production. The G7, a group of 7 economic powers, hatched a plan to put a price cap on oil exports from Russia. After news of the price cap was announced, Russia decided not to reopen the Nord Stream 1 pipeline. Russia has said that it will not reopen the Nord Stream 1 pipeline until the price caps are removed. Although gasoline prices are generally high in the U.S., they never really got as high as many consumers feared. U.S. energy analysts expect gasoline prices to continue to decline after Labor Day because Americans will drive less and conserve fuel. The average price of gasoline in the U.S. reached a peak of $5.02 per gallon on June 14. Since then, the average U.S. gasoline price has fallen to $3.79 per gallon. I think the good news is going to keep going for now, said Patrick Dahan, head of petroleum analysis at GasBuddy. Gasoline prices should continue to decline into the fall, barring a refining disruption, Dahan also noted. Most refineries in the United States are located along the U.S. Gulf Coast. I'm hopeful we can get to $3.49 between Halloween and Thanksgiving, said Dahan. He also added, There's an outside chance the national average reaches as low as $3.29, if there's no major hurricane in the Gulf Coast or more refinery outages. However, gasoline prices could actually turn higher in California and in the Midwest, Dehan continued. BP refinery in Whiting, Indiana, which refines 435,000 barrels per day, was down for maintenance for about a week. I still think we could see some states drop under $3, primarily Oklahoma, Texas by the end of the year, if not earlier, Dehan said. Gasoline prices in the United States are lowest in the South, where the average price is now $3.30 per gallon. The average price in Arkansas and Mississippi is $3.32 per gallon. The average price in Nevada is $4.83 per gallon. The average price in California is $5.24 per gallon. Consumers have been unbelievably lucky. All the worst fears have not materialized, said John Kildiff, partner with Again Capital. This is putting a lot of money back in people's pockets, he added. It gives people some relief and the economy some relief. It's like a huge tax cut for consumers, Kildiff continued. Gas prices could go down but not all that much, and they could even turn higher again toward the end of the year, said Tom Kloza, head of global energy analysis at Oil Price Information Service. Prices on balance are going to be relatively palatable for the rest of the year, Kloza continued. Nationally, the decline is close to an end, and prices could average a low between $3.50 and $3.75 per gallon, Kloza also noted. There's too many things that could cause a wobble higher, Kloza continued. Friday was the 80th day of falling prices, but that trend could stall out. He pointed to higher prices in the wholesale market Friday, Kloza also said. Geopolitics remains a key driver of oil prices worldwide. So, gasoline prices at pumps in the U.S. are being affected by the special military operation in Ukraine. The price of West Texas Intermediate crude oil peaked at $130 per barrel in March. But U.S. benchmark crude futures were trading around $86 per barrel this past week. The oil market has been much steadier than most energy analysts had expected. We haven't really lost any Russian oil. It's being redirected to India and China, said Kildiff. In the Iraqi turmoil this week, none of the oil production got affected, Kildiff continued. Multiple forces are acting on worldwide oil prices. Concerns about China's economy are putting downward pressure on prices. High prices at the pump have simply been a cure, resulting in less driving by consumers. In the U.S., gasoline demand has dropped off significantly this summer, said the U.S. Energy Information Administration in a statement. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.